Okay, so we're going to do another day, Tuesday the 11th. Now it is important to note that today Fed Chair Powell testifies. So although that is high impact, and that's at 10 a.m. Although that is high impact, it can lead to a sense of manipulation in the market. So point being is that there's a chance that, in terms of my model, no trade potentially will be taken today. However, we will sort of assess that as we go. We'll use that one. Not ideal. So look, don't extend to the right. I do. There we go. Okay. So we'll leave that as that. We can see that NQ purged that low, important low. There is SMT there as well. We can also see that YM at the same time traded into this inefficiency here. Now I often say that inversion fair value gaps to me are not the strongest. I prefer the fair value gap that is left in the price leg. Small fair value gap there. I'm going to mark that out, but so we do have SMT at the lows. Now I'm purely just marking up that level will be important at a later point, so I'm keeping that in where we had the high time frame cracking correlation at the highs, so that is important. This is saying see, but that is clearly wrong, which I will change. I'm just going to get these out because they're not required. I probably should have left the annotations on from the previous session. We obviously have high probability order block here, high probability breaker there, these candles here, small fair value gap there, it's a breakaway, so indicating lower prices certainly from YM. Same here, breaker, displacement lower. Let's just ultimately think using a discount anyway. Okay, right, so I'm in a premium, NQ in a discount, okay, and YM technically at EQ. So I want to take these, so that low here, and that high here, although that is the extreme high, will probably likely reference that. Okay, but we'll sort of get into the specifics as we drop down the time frame. Okay, so we're going to drop to the M4 where I have identified the true week open. It's just weird with let me just close, delete pane indicators. interesting. What is that? Let me just see. Oh, okay, cool. Okay, that is pretty cool. I'll get that off because I don't need it. Right, so what I was looking at is, that's better. I don't understand why 15, 15, 15, 15. Maybe. Yeah, I don't understand why. It's sort of grey. Right, so like, yeah. Do you know what I mean? Look how the colours keep changing. So it's hard to tell. Obviously, we're in Q1 of the yearly cycle, which means that high, well, actually technically it's that high. That is a key high from a yearly cycle perspective, but it's also, so you know, this is brown. I'm assuming this is supposed to be red. Third. Yeah, I'm just trying to. So yeah, I mean, we can kind of see. Let's have a look. So if I'm looking at this one here, yeah, and then yeah, so that's. I'm just gonna mark this as Q4 for now. I mean. I'll just sort of leave that like that. You can kind of see it. I'm only marking it off here because the coloration on that is not great, but ultimately where we've got, you know, the start of the weekly here and the start of the weekly there, they're pretty much dictating the monthly cycle. So yeah, I'll sort of leave it like that and we'll go from there. So anyway, let's just, there we go. Okay, so we've got some weekly, daily levels annotated. Obviously the daily CIBI up here. True weekly open, so we can see Monday's low. We are heading into Tuesday, so that is obviously of interest to us, certainly to me. And if we take from there, we've got a clean previous day's high, which, as we can see, we're in close proximity to. So what we should be able to see, what we want to mark up now, what I like to do just for reference, just more as a visual aid. Good. Okay. take these two key levels as they are important. Oh, no need to take. Well, actually, you know what? Let's go to that. Let's keep it symmetrical. Low here. High there. Okay. So now, before we sort of make some references to the day, we want to understand what the kind of primarily what the H4 fair value gaps are saying. Because this will help us determine current order flow. So I've marked this fair value gap up, and answer why, because we can see accumulation of shorts occurred within here. So I'm interested in that fair value gap. Now we can see that that this was violated, and we do, should that candle close above, we would have a BPR here, which is of some interest to us. So that's something that we need to pay attention to. Again, fair value gap here, it's quite large. Breakaway gap up here, which we didn't see in any of the others. So again, that was indicating from the perspective of NQ, a want to reprice lower quickly. So that's fair value up there, and as I said, potential BPR in here. We do have a fair value gap that hasn't been closed in, but as you can see, we've got two here, one here, one there. So indicating that we could see some higher prices. Okay, so let's detail a couple of bits. And we're currently looking at Monday the 10th. Sorry, we're looking at Tuesday 11th. Okay, so as usual, iOS, we can see that currently it's been to the downside, where we've seen a high time frame displacement lower, which has violated, discount PD arrays. Okay. Furthermore, we can see that the market's been manipulating highs, and displacing through lows, as we can see here, here. Okay, so that is noteworthy. So near term, we can assume institutional order flow and sponsorship is to the downside. Doesn't mean it's going to remain that way. This is key, but it doesn't mean it's going to end that way. To be honest, there's a chance that these lows are in the crosshairs. Okay. Oh God. Okay. So external to internal. Again, I'm looking at daily levels here. We know on NQ we've purged a key key low, traded through, displaced through. And that's relative to the 4 hour. I'm going to mark this up because as it currently stands, this fair value gap, or inversion fair value gap as it currently is, could be of interest. And because there's a BPR, if we trade it through the BPR, then we're going to seek significantly lower prices. Okay, so I'm just going to mark that in there, and we do have that's a daily level. So I'm just, you don't necessarily need all this lipstick up, but I just want it for reference just so I understand. So there's a daily CB here overlapping with a 4 hour. Okay, so institutional order flow near term is currently to the downside, but that could change depending on what price does. So we want to have a look at external range liquidity to internal range liquidity. Just going to draw out to the daily. Took out external up here. So order pairing took place up here. SMT traded down, market structure shift confirmed. So to me, lower prices are most likely. NQ did purge through here. Further low could be in the crosshairs down here. There's something to look at, and it's worth actually because that would be a Q4. So that's a significant low for NQ. Again, relative to the daily, you then have this low here, but we're quite a way away from there, so not worrying too much as of yet. So external, anyway. So from an ES standpoint, external range liquidity is taken above the highs. We were at all-time highs as well. Then we've traded lower. We traded through this BISI, became an inversion fair value gap, which we didn't actually trade to. We displaced lower, leaving this unfilled, which is something to note for institutional order flow. We left this unfilled CIBI, indicating speed and wanting to get to wherever it wants to get to. So we violated internal range liquidity, So the likelihood now is that we are going to target external range liquidity in the form of the lows. Okay, so I'm just going to make a note of that. So my attention now turns to external range liquidity, the old low. Okay. So TOs. Currently price is trading above Tariko's on all members of the IFT, supporting the idea of of high probability shorts. Okay, but again we're treading carefully. So SPs, I have noted clean and clear swing points formed by a 3 candle structure. Which is what we wanted. So this provides the basis of a clear liquidity pool. Where a possible high time frame cracking correlation could occur. Okay. Currently now what is interesting is the low. It's just hang on, let me just clean this up a little bit. Okay, so we want to make sure that we've referenced the same low, which if we go to the 4-hour time frame, just because it appears that this one's working better, we have this partial Q4 yearly cycle low here. Okay. Lowest low is yeah, kind of down here, sort of kind of down here. This is just a partial low. So we have partial low here, partial low here, partial low there, and then obviously down here. So this partial low is of some significance. Now we know that NQ violated that low, but that is in essence a partial actually okay. I'm gonna mark it like this. I'll have to double check that it's been confirmed, but we'll, because it's not the lowest low. Which we can see more clearly on the weekly, which is what I was trying to get to, as you can see here. Okay, so we can see that more clearly, and as you can see, there is a weekly fair value gap in there as well that we traded into and rejected. So a lot of confluence is to see higher prices. Now with that, we need to validate it. Gee whiz, what's going on with my... And the validation needs to be price closing above here. This one's been validated, but this one hasn't yet. And obviously naturally YM, we have that as well, and YM's hasn't been validated, so I'm not taking this SMT yet. It's not validated, so I'm gonna get rid of that for now. Yeah, it's not validated, so I just want to draw attention to it, but I'm not going to utilize it until I see some form of confirmation. And even still, I'm just going to use that more for reference in terms of directional bias as opposed to framing a trade off it. Okay, so so just making reference that price is traded in close proximity to the previous day high. That could lead to a cracking correlation whereby, you know, potentially we're interested in something, but currently on the sidelines. Okay. Alright, so we can see that all their previous day's highs are above the true week open, so that's good. Yes, NQs is marginal, but you know, that's fine. So all of that is good. So what we're going to do, drop down to the hourly. And we are going to take time forward. So next session should give us a true day open, and then we're going to just go to the next one, which is perfect. Okay. So we have a London low, don't necessarily have a London high. So I'm just going to mark this off as H1, which ultimately could become the New York high. But for now, I'm just going to reference that as an hourly high until it becomes significant to me. So it's London, so what I'm going to do is just take, and we have relative equal lows here as well, so it could be of interest. And with here, just going to mark that up as a okay, and this one here as well. Now we have confirmed we might be, well, technically we haven't, 'cause this is the order block candle. Now we will go and have a look at the M15, but these relative, just look at that. Doesn't that just look like price is eager to take those out? Okay, so we're going to drop down to the 15. Actually no, sorry, I haven't finished on the hourly, apologies. I have not finished on the hourly, just want to, we've got to do a bit more, which is okay. There we go, so that's that. And I want that level referenced here, and we do have a very, very small one in here, still important. Okay, so market could seek support here and continue higher. This is not confirmed relative to the hourly, that's why I've kept it dotted. Yes, it's confirmed relative to the 15 because we traded through here. Now, I'll be honest, I don't like the relative equal highs on YM. I would have much preferred the divergence occurring with NQ. So market traded through this area. Which I'm just referencing, which is important, and we have an overlapping fair value gap here, which just going to make that there. So this is getting rather actually want the same two things for here. That being this. And the reality is that we probably don't actually need the inversion fair value gap now, because okay, because technically speaking, prices rebalanced this CB, and the bodies did not violate. Just going to put in our error there. However, a lot can change because you know we haven't even got to the news embargo yet. Okay, and we just want to make some references to some things on YM. Make sure we are doing the same. Oh, I don't want that. And we had the volume imbalance there. There was a CB in there, which I just want to take the same. Yeah, there was a CB there, which was ultimately violated. Let's check the hourly. It's another one lower, which you could see price trade into. Okay, so just gonna stick on the 15-minute and move price onto the news embargo. It'd be cool if we could get full screen. Let's have a look. Maybe not. Okay. Right. Let's move it on. We'll just use the 15-minute for the time being. There's no real. We'll just move on just a little bit quicker. So we can see our price is respecting, and it's already off. Right, what I'm going to do, not so much in referencing because the hourly block is quite large. That was the mitigation candle. From a 5-minute perspective, so from a 5-minute perspective, I'll just turn the fan off. Okay, realised my fan was running the whole time. I mean, technically this is an entire order block, but we validated so. Okay. Yeah, so within this area here, we have this small 5-minute fair value gap, which that's important for us to. We want to see that. Okay, I'm just going to copy that across just to make this a little quicker. But as you can see, the fair value gap is. I'm going to mark this fair value gap in here. However, this area here, as we know, allows us to enter a trade in the event that we missed our primary entry. Now, we may end up being unlucky. Okay, so we're at the news embargo now. Why? I don't understand why that just continued. Okay, well, it looks as though we're going to miss out on this opportunity, unfortunately. So we drop down to the 5-minute. What did we see? So we had the 15-minute order block. Let's mark that off properly. We know it's that level, but let's just put an annotation on it properly. So this here. I'm just going to mark as key level. Oh no, don't do that. I'm just going to put it just as black. We'll make a reference on it, which is top right, which was the M15, and that ultimately was change of state and delivery. Now, we traded through the inversion fair value gap and we closed below on this candle. This was all, this was at 6 o'clock in the morning, so we haven't even got to the New York session yet. So on that basis, I'm happy to let the trade go. Again, it's not about being in every trade. You want to just chase every trade. You want that trade to formulate within your model. Part of my model is that I want to engage the market within the right session, and unfortunately, price here. So as we can see, we traded through on the M15 through the inversion fair value gap, which we did on the M5 here. Traded out, confirming the order block. So the inversion fair value gap was the first clue, but then we traded out, confirmed. So now if we trade back into this key price level here, that's obviously trade entry 1. Okay, now we've got this consolidation here. We can enter at any point in any time in here. It's fine. And then we trade lower. Put a CBM 5 here, but that's actually not true. So then 15, so I'm just going to delete that. Which is fine, because ultimately price traded back up into it, so there's no harm in having that there. But ultimately, the M5 will just give us fans are going wild, which we didn't trade up into there. There's a tiny one just in here, but ultimately there wasn't one within this area here. So fortunately, it's one of those situations. If price was to come back, take out, you know, let's just gonna have a look at the hourly. Do we have an hourly? This hourly BISI now becomes an inversion. As we've, what time is this candle? I don't think we've got to, well, it's 8:30, so quite possibly we can come back and retest it. Okay, let's continue. And this is just one of those that, there you go, it happened, it just happened pre-session. Sometimes there's not a lot you can do about it. You can take them if you're able to get into the trade. You can absolutely take it. Is there an element of risk to it? Yeah, there is an element of it, but again, we had all the signs, especially the closure below the inversion fair value gap, confirmation of the high probability bearish order block, you know, relative on the M15, the market traded away from the CB 15, again confirming not see lower prices. So yeah, it's just one of those that it occurred earlier than the session, and it's happened. So unfortunately, guys, this is one that has got away. I mean, price is ultimately going to seek that low. That for me is the valid trade. Like I said, you know, ultimately you'd have, you know, bit early, we could have said, but by the time we'd have come back to the chart, any point in here would have been fine, even if you had said, okay, I'm gonna get in there, you know, and then take this down to here, just play that on forward. We should see it. There you go, look at that, and that's how equities open. It's gone, you know. So fortunately, that is that move. We missed out on that. So we're gonna wait until we're gonna wait until Thursday for PPI and Friday. They're going to be our two trading days that will ultimately try and get an opportunity. But like I said, it's great to see the high time frame framework in play, which is important. We had the clean swing points. That was important. Price was above the true week open. The previous day's highs of all three members of the index future triad were above their true week open. We were waiting for a high time frame crack and correlation to occur at the highs, which we anticipated the highs just due to the fact of where price was in proximity to its previous day's high. So that occurred. We also wanted to see this sort of setup in London or New York. Ideally, we wanted it in New York, trade the New York session. We also saw, so we obviously had the stacked TO confluence, because there's the daily open traded up. So we've got stacked confluence now of the stacked TOs. purged the previous day's high, so by default it has purged a hourly liquidity pool, and there was an hourly liquidity pool on all of them that was purged, so again satisfied that, and then traded lower. So in essence everything was satisfied. Had we planned a little bit better that we could have got in early? Yeah, absolutely. We're trying to stay consistent with trading the New York session, but that's just one that ultimately got away. But yeah, it would have been a lovely trade to have started the week prior to CPI tomorrow, and the market will continue to price down. So yeah, high probability trade model in full effect. Unfortunately, it wasn't able to take that trade, so we'll just sit tight and wait for the next one. But guys, that is going to be it for this session. No trade taken, but again, you can see how we've formulated our idea, what we wanted to see. We saw all the things, and again, yes, in hindsight, we could have taken the risk and took the trade out of session. The framework was there, could have continued lower, but this is just this is the hallmark of being a trader. We don't need to rush. More opportunities will present itself, and hopefully we will nab one in the next session. So until then, guys, take it easy, and I will catch you in the next one.